investment process channel. I am C3 Christopher Campbell. This channel where we teach people how to create generational wealth through trading. Let's get into it. We're gonna go over this. What is a prop firm and why do they exist? Let's go ahead and get into it. Let's talk about it. So prop firm, I use a prop firm myself. At first I had an account where I could trade indexes and, some point in time, either you're starting out or some point in time, your liquidity is not where it needs to be, you can join a prop firm. And we're going to talk about the pros and cons of that. So one of the main things is for a prop firm is you get to trade without your liquidity. You get to trade with their liquidity. Now, of course, there are pros and cons and there are catch-22s and all kind of things that you should know. So first of all, with a prop firm, this helps traders get started without a large sum of capital. If you know anything, in order to have any kind of leverage in the US, you need to have at least $25,000. This kind of alleviates that, where you can use their leverage to trade. And again, this is not actual money. This is paper money. This is not real money. And what they do is they pay you for having your plan, having structure, executing, and making sure that you are trading with some kind of system. And what I mean by system is you have a system. I only take these kind of trades, only these types of setups do I trade, and I have been profitable over this amount of time after working in a simulator, right? So this just moves paper trading into paper trading for a prop firm, in which they pay you for you building your account, showing that you have that kind of mindset. So this is definitely for beginners and intermediates, and this is for U.S. Traders seeking leverage, because we don't have leverage, right? So what I want to really focus on is like the prop firm's structure, the evaluation period, their risk, and payouts. So let's just talk about this. What is a prop firm, right? Prop firms, they fund traders using their firm's capital. Now, again, you are on a paper trading account. You do not actually manage any of their funds. None. My thought, and I don't know this for a fact, I'm not a prop firm member. I haven't started up a prop firm. I am a customer, in which they call them, another thing we can talk about another day. We have a business agreement. They pay me out as a business, and they, what it seems like is they copy your trades once you get a funded account. But in the meantime, when you are going through your evaluation account, it's just paper trading. But again, I do not know that for a fact, so don't quote me on that. So after you go through an evaluation period or challenge, they call it, then you have access to what they call a funded account. So where you have that same amount that you have been trading, you have shown that you have a setup and a plan that is profitable, and then you start trading with the actual funded account. And as you grow your account, they pay you out based off of the money that you accumulate over time, right? Same thing as if you traded for yourself, but they take a percentage and you get a percentage, right? So your profits are pretty much shared, and I'll go through them. Sometimes they're 80-20. I don't think I've seen 60-40. The one I'm with is 90-10. And again, this allows you to use, trade without, your own funding. And my ideal is, as you start building up funding from them, as you start earning, then, you put that money aside and, have your nice little nest egg and start trading on your own. Some people use it as income. I would not recommend that. I would recommend that you, set you up, your own account so you can get the proper amount where you can start using leverage or trading on your own. But some people do make a living off of this, So that's up to you. Now we're going to take a look at, there are international and U.S. prop firms. And pretty much, for me, if you're in the U.S., I would recommend that you just use a U.S. prop firm. With this, get to know your trader. Today, a lot of prop firms, or the benefits of doing an international prop firm, I don't believe is the juice is worth the squeeze. But that's me personally. You may find that your experience is a little different. But I have what I consider the top three prop firms here in the U.S. Okay, here we are, U.S. versus international prop firms. So these top three here are the U.S. firms, and we can go like line by line real quick about. And I'm not, what is it called? I don't get any kickbacks from any of these prop firms. So this is just a side by side comparison. So here we have Apex Trader Funding. You can get anywhere from a $25,000 account all the way up to a $300,000 account. They split a 90-10 once you get funded. So that's a good thing. I do know about them, and I know for me, the process is very arduous. Very, they have a lot of rules that you need to know. You have to read up and understand what their process is. Now, they also will get you a same day evaluation phase. Now, their evaluation model, they say 2-phase evaluation, which is, again, you get a paper account that you have to get above a certain amount in the evaluation phase. And then once that evaluation phase is over, then you have your funded. And for Apex, I'm trying to remember. So you would, for the funded account, they still have a drawdown or a trailing drawdown until a certain amount. And then anything above that, you're able to withdraw the 90%. Now, they even have rules about that. I would recommend that you go to their website and take a look and figure that out. But when they say 2-phase evaluation for the evaluation model, that's what they mean. You know, you have your trial period account, then you have your funded account, and those are the 2 steps. And again, with that, even within that second step after you get funded, they have rules as well. So, payout cycle bi-weekly. So that means every 2 weeks you can get paid. So that's good for, again, like I said, some people utilize this as actual income. So that's a plus on that end. And you see the website there. I'll put the website in the description. So all these 4 websites I'll have in the description, so you guys can go to that website. TopStep. So TopStep, they have from 50 to 100K. So TopStep, their evaluation model is a combine. It's the same setup where you have a period of they trade with paper funds, and then you go over to a funded account. They just call it a combine. So the 2-phase evaluation, like Apex Trader, TopStep is the same way. Again, go over to their website, take a look. Their payouts are monthly. So that means once a month you'll get a check. If you earn a certain amount, you go ahead and put in for your payout. You get it once a month. They pay out once a month. So you have the website right there. So Elite Trader Funding. Now you see they have anywhere from 25,000 to 300,000 for the type of accounts you can get. They have an 80-20 split. The thing with that is, though, as you see here, they have a 1-step evaluation. So you don't have to go through the paper route, then the funded route, and then start getting paid out. You can pass the first evaluation, and they pay out weekly. So again, if you're in the aspect of looking for funds quickly, that's the best way to go. Now, I'm not too familiar with Elite Trader. I had a couple of people that I'm in a group with that sent me this, and I think they're more expensive, but that's why. So you pay a pretty much like a monthly fee for an account. So if it's a 25K account, it costs X amount of dollars. 100K account, it costs, a different amount. Of course, they cost more the higher the funding that you get. And again, Elite Trader, that's one step evaluation. If you have a system, that's the way to go. Again, if you're in the case of, hey, for whatever reason, life happened and you don't have the liquidity, but you have enough liquidity to get a 100K monthly account with Elite Trader funding and to get you, started back up, that's probably the way to go. So FTMO, that's an international prop firm. Again, with the getting to know your trader, I'm not sure. Can't speak about it too much. I'll do a little bit more research, but they have anywhere from 10,000 to 200,000. They have a 90-10 split as well. Again, they have a 2-step challenge, same as Apex and TopStep, and they pay out monthly. So those are the prop firms in a nutshell. Any other prop firms out there will be some kind of variant of this. It'll still probably be like a 2-phase evaluation or 2-step evaluation. Then you get funded. All of them are pretty much the same. So that's why, again, I picked like the top 3 in the US and then, one international prop firm. There's not much of a difference other than, like I said, the rules and regulations about taxes and things here in America. And I'm not here to talk about taxes, but that's the difference in you getting funded. So here are 5 things every beginner should know about prop firms. Number 1, understand the evaluation and profit target rules. I cannot beat on this enough. You might like the 1-step one. You get with them, then you find out they have too many rules in order for you to get paid out. And, maybe getting paid once a month might not be your thing. Or getting paid weekly is your thing. But again, they have 600 rules in order for you to get paid out every week, right? And number 2 here, each one of their sites has a daily drawdown limit or trailing drawdown limits. You need to know what that prop firm has and how that will affect your trading. I'll say this all in summary once I get through the 5 steps, but the main thing is having these rules will make you a better trader. If you do not have your setup and your rules already together, this will make you a better trader. I'm just saying that it will. Now, it will change the way you trade. If you're not already trading like a prop firm, you will be able to understand why having a system is so important. So number 3, no payout schedule and withdrawal policies. Again, that's why I said I can't harp on that enough. No payout schedules. Definitely no withdrawal policies. Like I said, you might think, oh, I made a landfall. I made $100,000 in a day. They're like, no, we don't pay off for windfalls. You need to be trading consistently that amount. And I think one of them had said you have to have 30%. Your highest day has to be 30% of your account. When I say account, that's how much money you've earned. So say it's $2,000, right? In order to do a withdrawal, you have to have $6,000. What's it? I think it's $6,600, something like that. 30%. Yeah, something like that. At least $6,000, if I do the math right. So you have to have at least $6,000, like 2,000 divided by 30%. You have to have at least $6,000 in your account to withdraw. If you had a $2,000 day, you might say, oh, I had a $2,000 day. Excellent. Let me withdraw that $2,000. I have a little cushion here. I'm above the threshold or whatever, and your account is like $5,000. over where you started, they're going to say no. So make sure you know about the payout schedules and withdrawal policies. This one, I can't harp on that enough. Treat this as a business because that's how you're getting paid. You're getting paid, I believe it's a 1099. They do not pay you like a W-2. You're not a worker for them. They pay you as a business. So you got to pay your taxes and all that stuff. Get with a accountant. Make sure you're doing what you're supposed to. And you manage your risks, not emotions. I can't harp on that enough. That's why I said if you have a system, maybe that one day evaluation where you're funded after, I think it's 2 days of being evaluated, you can get funded. Go for it. If you have a system. If you don't, this is probably the best time to develop your system, and you can do it while trading with a prop firm. Avoid over trading, consistency, and big wins. Going back to what I said, you know, with that windfall thing and getting paid out withdrawal process, they're in a business. The more you trade, the more money they make because, you know, with what is it? The commissions and things. So every time you click the button, it's good for them. If you wait to a day where, you know, like the market is moving, you jump in, like again, you make 100K in one day. With that, according to that process, you need to have 300K in your account to withdraw anything. So just be mindful. Just be mindful. Let's go to the next one. Let me see what else do I have here. So overall pros and cons. Low startup costs. You know, all you have to do is pay for your account every month. You know, I think, you know, I don't know. I've seen them anywhere from like $200 to, you know, like $500, $600. For me, you know, you could go out and party on a weekend or, you know, a nice date and have this. Now, if your financial freedom is important to you, I would rather do this than, you know, go out to the bar. I'm not saying that I don't go out to bars, but I'm just saying, you know, it's all a part of managing your risk, right? Access to larger capital. Again, this will get you where you want to be quicker and get those payouts quicker. Risk protection through firm limits. So again, if you hit your threshold, it stops you out automatically. You will never blow their whole account. Now, I say that to say, if you're blowing your account, this will probably be a good thing for you to start understanding and have some good discipline where you're trading within these rules, right? So cons, strict rules and limits. You will definitely change the way that you trade. For me, I was holding positions a lot longer because of the way I trade with the prop firm now. I only trade, and maybe a lot of you do, I only trade between 9:30 a.m. when the market opens and 11 o'clock because I still have a full-time job. Payout delays or denials. So you do run that risk. Again, like I said, like you hit a windfall one day, you're like, oh, I want $2,000. They're like, nope, you need to have, you know, X amount of dollars in your account before you can get a withdrawal. And I think some of them, when you ask for a payout, it resets. So you have to start building your account again. It doesn't even matter that you have $30,000 in there from one trade. It resets, and then, you know, you start building your account up again from that point. Now, the good part about that is you have a cushion now. But, you know, other than that, you know, still is what it is. Profit split with firm. So look, they're taking all the risk. So 80-20, 90-10 split, I think it's real good thing. Now, this is the kicker here. No guarantee to longevity. Prop firms come and go. That's why I said go ahead, take your winnings, take your earnings, and just go start your own account. There's no guarantee that this prop firm that you're with today will be here tomorrow. There's no guarantee. So that's it. This is the first part of our series on prop firms. I just wanted to share that with you guys. And any questions that you guys have, put in the comments below. Again, trading is risky. This is just my experience. My past performance does not guarantee future results. This content is for educational purposes and not financial advice. So again, this is the Investment Process channel. I'll see you guys out there. Let's keep building a generational wealth.